Hello there, Maverick Traders. This is Robb Reinhold. It is the trading room, and this is options expiration for monthly options for March. We also have quad witching. So again, we've got expiring index options, futures options, equity options, and single stock futures options expire. Typically, we see some volatility, especially on Wednesday during these weeks. In this session, we're going to be going over the news of the week, what happened. We'll take a look at the broad markets. Then the big question is, did anything change? We take a look at all the charts, we take a look at them with a fresh set of eyes, and then we go down all of the sectors, score from +3 to a -3, and then we go find the best stocks in the best sectors.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's get ready for the week.
Looking at this week, we saw new all-time highs on Thursday. So the S&P and the NASDAQ closed at all-time highs on Thursday, but then we had a little bit of a sell-off on Friday. Friday, we actually were making new all-time highs, but then we had a huge reversal in NVIDIA. Take a look at that chart. That is a 10% intraday reversal. That is a huge, huge move, and it really just took everything with it. Anything that was a high flyer like NVIDIA, they turned around too, and by the end of the day, we had closed down. This was in spite of Thursday's earnings after the market being really bad. If you take a look at these four stocks, MDB, AVGO, Broadcom, Marvell, and Costco, they all had really bad earnings reports. And what we've seen most of these tech companies, Costco's not a tech company, but the other three are, most of these tech companies have been beating and they've been rewarded. That ended on Friday. And I was actually a little bit surprised that we were able to shake it off in the morning, but by the end of the day, it had absolutely fallen apart. We also got that reversal in Bitcoin. Bitcoin reached above 70,000 on Friday, but then it reversed and lost ground as well. We definitely ended the market on a weak note, and we did get some pretty important information this week. The biggest one we got was this non-farm payrolls. Really the big news this week, and it really was a mixed bag. Take a look at those numbers. The headline number of jobs created, much stronger than expected, but lower average hourly earnings, which is again, not inflationary. I don't want to say disinflationary, but it's less inflation than was expected. And the unemployment rate went up, which means that even though more jobs are created, there's now more people looking for work. That should put some downward pressure on the payrolls in the future. Overall, the market didn't really know what to do with it. Originally, the dollar spiked down, the equities spiked up, and then the equities fell apart, and the dollar went back up. By the end of the day, it just had softened throughout the day, especially with that NVIDIA intraday reversal. So the question is, did anything actually change on a chart? If we take a look at the performance for the week, we see that the Dow was down about 0.75%, the S&P down about 0.25%, pretty much flat for the week. The Qs got hit. The Qs definitely got hit, down 1.5%. The Russell was somehow the outperformer, but again, it wasn't an up week. Well, slightly up, but not all that much. I want to point out this gold number. I pointed out on Thursday in my after market video, I showed that this long-term chart on gold, we are breaking out to new all-time highs on gold. Gold and the US dollar have an inverse relationship to each other, so the dollar has been falling pretty substantially. A falling dollar is good for higher equity prices. A falling dollar puts pressure on the bond yields, pushing it lower. We usually get some bullish action. So definitely not a clear signal of exactly what's going on with the market. But here's a great thing. All of this is what we call cocktail talk at Maverick Trading. This is the only thing that matters. This is the reality. This is price action. As you can see here, we pretty much were in this high base, and we tried to break out of that high base. Take a look at Thursday and Friday's candle. we have now sunk back in. You have to assume that that breakout failed, which means we're probably stuck back in this range, which means this market can go all the way down to the lower end of that range, right around 50-50. This market could pull back. 50-50 is about 75 S&P points. That's about 1.5%. We can still pull back 1.5% without violating anything about this current uptrend. We closed on our lows on Friday. We cannot ignore that. I think we're going to start the week off on a weak note. We'll have to wait and see, but I could just see this market starting off weak. If you take a look at the NASDAQ also failed to break out. Failed to break out of this base. As you can see, we're right back down to this pretty key support level. If the NASDAQ breaks below this, we're now below the $20 or the 20-day moving average. We broke through it a little bit here. We could easily see the NASDAQ go down and test 426 on the Qs. That would be a big move. That's about 13 points or about 2.7%. Remember, we do get pullbacks on bull markets. We pull back to 20s in narrow pullbacks. We pull back to 50s in heavy pullbacks. We still have to assume this is a bull market. But with that being said, we definitely want to have our spidey senses up because that's not the kind of price action you like to see on a Friday. I think at this point, we still have to be bullish, but we now have to start talking about getting a little bit more defensive. Not bearish by any stretch of the imagination, but I think we just have to start talking about market's had a big run. It's starting to show some signs it is exhausted. It tried to break out. It failed to break out. We close on a Friday week. Let's start having that discussion. Here's the heat map, and you can see some of the big names that turned around. But for the most part, you can see there was mostly green underneath everything. Industrials were fantastic. They were phenomenal. Energy, great run this week. Materials had a great run. So there was some pockets of strength in this market, but the high flyers definitely started to give some back. So this week, let's talk about what we're looking for. This week is quad witching. We talked about this at first. Every single 3-month period, we have all of these options expiring. And a lot of these options expire on Thursday morning. So basically, Wednesday is the last opportunity to trade some of them. So we typically get the most volatility on Wednesday. And when you take a look back and you take a look and see what happens on that Wednesday before quad witching, it's usually more down than up. Of course, we have no idea what's going to happen this week. No idea. But just think about where we are. We just failed a breakout. We plunged on a Friday. We had big intraday reversals on all the best performing stocks. We're going into a week that could have some excess volatility to it. I think it makes sense. It just makes sense to be a little bit more defensive. Now, we talked about this last week. I did not change the second part, later stages of a bullish move. We don't need to be scared. We have no idea what happens. The thing about the market is when it pulls back, it does so in such a convincing fashion that you bail on your outlook. You say, oh my gosh, I'm bullish, but this price action is so bad. I'm going to bail because I'm scared. That is a mistake. However, we can become less bullish. That's absolutely allowable. We can become less bullish, but we can't just get out and panic. We can't just throw on a bunch of bears and hope and pray that we're right. That's wrong. Those are all reactions. We can just dial back our bullishness a bit. We can go from, heavily bullish to moderately bullish. That's very prudent to do in this thing. If this all comes and goes and the market recovers and we pull back from majorly bullish to mildly bullish, we'll still make some money. We just won't make as much. So I think we're in that period of time where I think we can start talking about becoming less bullish just for a risk management sake. This week, we do have some big news on the inflation front. We've got the CPI coming out on Tuesday. Pretty much every single measure of inflation has been coming down. If this is less than expected, we should see the expectations for a rate cut from the Fed start to go up, which means bonds will fall apart, dollar will go down, and the U.S. equity markets likely get a bid. This is a big event this week. If this CPI comes out at these numbers or below, we'll probably have a pretty short pullback. I think we'll probably pull back Monday, and then this number comes out and everyone's going to be excited again. If this number doesn't come out how the market wants, then I could see there being a deeper pullback, maybe to a 50-day moving average. We do get the PPI on Thursday, but I don't think that's going to be all that big of a deal. I think everyone is really waiting for this CPI on Tuesday. This is the first week in a while that I am actually forecasting a down week. I've got a -1 on the week. Now, this is just coming from me looking at the situation, me looking at everything and saying, hey, this is what I think is probably the most likely scenario. Understand, this is my opinion. This is from very, very recent price action. I could be totally wrong. What I do not have any discretion over is this monthly outlook. We're above the 20, we're above the 50, and the slope is going higher. I still have to be a +3. So now I can adjust my trades within a +3 framework, and maybe this week I'm backing off a little bit. Just maybe backing off. I've got a lot of bulls. Maybe I put on 1 or 2 mild bears for this week to bring my net delta down. But we still have to remain bullish. The market is still bullish. All right, let's take a look at some sectors. We're going to score all these sectors from strongest to weakest. This is going to tell us where we should look for our trades.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Looking at the performance last week, we had some outperformance from the defensive sectors. Interest rates have come down, so it has helped the utilities and the real estate sector. Now, these have been our weakest sectors up until about last week. Last week, we upgraded real estate from a 0 to +1. Real estate is going to get another advancement this week. What really got hit this week was consumer and tech. This is where all the pain was felt. But I want to just point out, materials and energy did great. Industrials and financials did great. These were industrials, financials, materials are all +3 sectors. They just did fine. They did absolutely fine. Where we saw the pain was in consumer and in tech. That's also where we've seen the largest runs lately. Let's go through each sector. Let's score it from -3 to +3 and see what we got. So here we have utilities. Utilities last week was a 0. We were sitting right here. And you can see we have now broken out. We are now upgrading this to a +2. It's above the 20, it's above the 50. And once those things cross and start to turn up, we'll go to a +3. But big change in utilities. Here we have the comm services sector. Last week, it was at a +3. We're downgrading this one to a +2. Failed the breakout. Absolutely failed the breakout. And we're now back at the 20-day moving average, and that 20-day moving average is starting to flatten out as well. It's still in a basing pattern, so we cannot get bearish on this. This could easily break out and run, but right here, right now, it should have popped. It should have broken out back here. We're now down below moving averages some of the days this week. It's definitely time to just downgrade this one to a +2. Real estate was a +1 last week because it broke above, and then it continued its run and actually closed on a really nice note on Friday. The market closed closer to its low than its high on Friday. Real estate closed closer to its high than its low, upgrading this one to a +2. Up next is the healthcare sector. As you can see, healthcare, we didn't really go anywhere. We went pretty much flat. We went from a +3 to a +2 last week, and it did not bounce, so we're going to stay here at this +2 on healthcare. On industrials forgot to get the memo. Someone forgot to tell industrials that this was a week to struggle because industrials just kept chugging higher. And even Friday's candle, take a look at that candle. It pretty much where Thursday's closed. There's nothing real worrying in that candle. We're going to stay at a +3 on industrials, looking fantastic. Going next to financials, did the same thing. Take a look at this. Someone forgot to tell financials that markets were a little shaky last week. It basically went up 4 out of the 5 days. Other than this little gap and pull back, the market was really happy with financials. So we're going to leave financials at a +3 as well. These are definitely the outperforming sectors. Where we saw the pullbacks was in consumer and in tech. So consumer goes from a +3 to a +1. Big pullback. And you can see not a great bounce. Not a great bounce here on Thursday, Friday. Even Thursday. Remember, Thursday was a good day. Thursday was the day that the S&P broke out to a new all-time high. Look at the candle on Thursday. That is not a sector that participated with the rest of the market when it was in a good mood. So +1 on the consumer sector. And technology, it's still at a +3. I looked at this one. My personal opinion is that this is weakening as a +2, but technically speaking, I couldn't move it down. Why? Because technically speaking, it's still above the 20, it's still above the 50, and it's sloping higher. Easily somewhere during this week, it might get a downgrade to +2. That could easily happen, and then a downgrade to +1 or 0 by the end of the week. But right here, right now, this is how you have to look at things. I always use the story of, imagine you woke up out of a coma. You'd been in a coma for 10 years. And the first thing you did was look at this chart. You know nothing. You don't even know who the president is. You don't know what the economy's doing. You have no idea. The only information you have in front of you is a chart. And if you looked at this chart, you'd say, yeah, this is a +3. This is still, yeah, Friday's candle is ugly and nasty. But take a look in this chart. You've had a few ugly, nasty candles, and ultimately, those were great buying opportunities. Always use that story or make up a story of yourself of, if I saw this chart for the first time and had no idea what it was, how would I read it? That is how you do technical analysis, because now you're not bringing in your personal biases when you look at it. So technology to me stays at a +3. Here is materials, had a fantastic week. Yes, ugly candle on Friday. Yes, fully expect there to be some more downward moves in materials. But when it finally does wash out, I want to be a buyer. I definitely want to be a buyer of material stocks here. And then take a look at energy. Energy, I want to go to a +3. I want to go to +3. You could get out your magnifying glass and you could say, yes, this 50-period moving average is now sloping higher. It's close. Look, +2, +3. This one is making new highs. And again, the market closed near its lows on Friday. This closed at its high. I really like the energy sector. I talked about it last week. I still think the energy sector looks really promising going forward. Here's where we were last week. What gets the upgrades and downgrades? Well, comm services and consumer got downgraded. And what got upgraded? Utilities and real estate. Everything else stayed the same. Sorry, real estate should be at a +2. That is my mistake. Real estate, move that over into a +2. When we're looking at what is working right now, these are working great. These worked great this week. If you were in these sectors, most likely the trades you had did really, really well. What is falling out of favor is some consumer, some comm services. What is strengthening? Again, I wish I could move this energy to a +3, but we just can't yet. We're still in bullish territory. As you can see here, there's nothing that's telling you to be bearish. So when we're looking at trades, we got to think about the momentum here. Consumer has weakened significantly. Comm services has weakened a bit. Those are going to be the better sectors to look for either neutral or bearish trades. What is strengthening? Well, utilities and real estate are strengthening. What is staying strong? Financials, industrials, materials, and energy are staying strong. This is where we need to look for our trades. So let's go through a couple of these sectors and find some possible setups. First off, in real estate, this one has been upgraded twice over the past 2 weeks. And here is EQR. EQR, we've got a big bit of resistance that we have cleared out of. That 6250 area. Big bit of resistance. It hung out around there for a couple of days. And on Friday, we clearly moved higher. This is not a fast mover. Take a look at the scaling, 61 to 62. This thing will move about probably 50 cents a day max. And take a look at these last couple of days. Between the highs and the lows, you're looking at like 70 cents. This is not a fast mover, so we need to treat it as such. This thing's not going to run up to $70 a share. I'll tell you that much right now. It just doesn't have the kind of energy to do that. We can still make some really good trades. I really like this diagonal call spread. So buy the 60 in April, and we're going to sell the March monthlies at 65. At 65 is trading for about 25 cents here. So you've got a really nice risk graph. If it just hangs out and stays high, you'll be profitable. Probably anything above like 62.50 is going to be a profit on this one, probably 62.70. Somewhere around there, that's going to be your break even on this. That's a really nice trade. If it does take off and run, close it all out. If it hangs out below 65 and you still like the trade, you can just simply hold on to that April long call. That's why we love the diagonal call spreads at Maverick. Comm services is a sector that weakened. So if you're looking for a sector to find some bears or some sideways, I think this is where you want to hunt. This week, let's take a look at Verizon. As you can see here, we made a new high here. We broke down. Remember, the rest of the market kept going up in February. This one didn't. It rallied, it made a lower low, fell, found the support there at 39.50, made a lower high there, and here we are. There could be one more bounce. It would not surprise me at all if there's one more bounce. But if you give this thing enough time, I think we're looking at a pretty easy break. We do not want to get too bearish on things. Don't be looking down here at the 37. That's way too bearish. I think the 39. I think the 39 is where you want to look. So this is why I've got either a butterfly, a little bearish butterfly, from 38 to 39.40, which again is going to be between here and here. So we just want it to move down into this area. That's going to be our profit area right in there. If you want to be more bearish, then a bear call spread, bear put spread, something in the 39 to 40 area. Remember, we do not have a green light to go heavily short because the market is going to hold up everything as long as it stays moderately strong. Once we get more bearish, then we'll get a little bit more aggressive on our bears. But for right now, we call them chicken bears here. -1s, -2s at the most. Industrials is a sector that pretty much shrugged off the weakness. So let's go find a long here. Looking at Raytheon. Now this is a bull flag pattern. This is where a market or a stock has a big run up and then has a very shallow, lazy downtrend. And then it typically breaks out of that. And you can see this kind of looks like a flag. Once it breaks out of this, this is the buy point. As you can see here, we're starting to break out of this point. We're not looking to be super bullish here as well. Remember, the markets really for the first time, I think, look a little shaky. I want next week I want to see what happens next week. I'm not ready to be pounding the table. This is a great buying opportunity like it's been over the last 2 months. This time I'm like, hey, you know what? I kind of want to get through this quad witching week and monthly options week. I kind of want to get through that and see where the market headed that week. I'm not looking to stick my neck out on anything, so I'm going to be pretty chicken on this one. As you can see here, a 90-92 bull call spread. We're looking at this. That's all we're looking for. You could go a little bit more aggressive, a 90-93. You could do a diagonal. But look, I don't think you need to get all that aggressive here on anything. I think it's prudent to pull back. Jumping into consumer, here's another sector that has slid. This one went from a +3 to a +1. Here we have Tesla. Now, I do not trade stocks like Tesla, Amazon, Nvidia on purpose. Why? Because I use screeners. Whenever I see one of our traders, and I know I'm going to be stepping on some toes here, but these are toes I don't mind stepping on. Sometimes I see traders that they just trade Microsoft, Nvidia, this and this, and all they're doing is they're stuck on these symbols. Now look, trading is trading. Whatever you trade, it's a stock symbol with a bin and ass that goes up and down, and it has a measure of volatility. It truly doesn't matter what you trade, but people have it in their mind like, ooh, I'm trading Tesla. That makes me... Look, it's just a vehicle. It's just a car to get you where you want to go. Some cars go faster than others, but I could give you 100 stocks with more volatility than Tesla if you wanted to go faster. So I shy away from these because these have lots of psychological pitfalls in them. People will trade these because they like Elon Musk, or they don't like Elon Musk, or they like electric cars, or they own a Tesla. Those are all really dumb reasons to trade a symbol. The only reason to trade a symbol is you think you have an edge at this particular moment in time. People that just continually pick these stocks, they're not really doing all the steps of trading, in my opinion, which is going through the market and finding the best odds for their trade. They're looking at 10 stocks and trying to find the best one out of those 10. That being said, this one, in my opinion, is the best short in the consumer sector. It has completely ignored the rally that's happened. And not just that, we have broken some pretty key support levels, and we tried to bounce on Thursday and we got absolutely hammered back down. To me, this thing looks like it wants to go lower. Here's the deal. We're still in a bullish market. We cannot be aggressive. So I'm not calling for anything aggressive here. I'm actually calling for really wimpy trades. Here we have a 177.50, 172.50. That is really wimpy. 177.50, 172.50. That is what I'm looking at. If it trades below the bottom of that box, it's max gain. If it trades above it, it's max loss. This is not an aggressive trade. This is saying, I think Tesla is going to stay weak. Now, I'm looking to get a little bit more short-term bearishness in my portfolio this week. So as I'm looking at my portfolio, I have mostly bulls expiring this week. I'm looking at this week saying I think it's going to be a down week. So I am looking at a March 15th. And again, I'm not doing this because this is what I want to do. And that's a dumb thing to say. But if I want to get more bearishness in my portfolio for this week, the way I can do that is by putting on a bearish trade with some bearish delta to even it out, to reduce my exposure. So let's say the market does have a big pullback. My trades that are mostly close to max gain right now are going to fade. This one is going to work for me, offsetting some of that loss. I'm just doing this to be more defensive. If that's not the reason to do it, give yourself some more time. And I think a 170, 175 bear put spread makes some sense. And the last sector, energy. Here's the crazy thing. Energy, the stocks in the energy sector are looking much, much better than they have been. But you take a look at what oil's doing, it's not really going up. If oil can make it above 80, this sector is primed for a run. Now, if oil doesn't break above 80, then I don't think we'll get a run, but I think that things are actually holding in and doing well. I wanted to find something that has had a good run, outperformed everything, having a little base here, and I came across PR, Permian Resources. As you can see, we are high basing here. Now this base could last for longer. I'm fully aware that this $16 area is a little bit of resistance for this thing. And probably down to this $15.50 area, we could be in this base for a while. I think the energy sector is going to hold in there, either hold in there or go higher. I think this stock is likely either going to hold in there, or if the energy sector breaks out, this thing could easily break out. So I'm looking for this diagonal call spread. So take a look at the 15 to the 16. So I'm selling at the money. If this thing takes off and run, I won't make a lot of money. I'll make a little bit, I'll close it out, and I'll just go to the next trade. If it hangs out around the 16, I've got this April 19th for a long time. It's 4 weeks that I've got this trade, actually 5 weeks in this period. I've got this one for 5 weeks. I've got a lot of time for this stock to move higher. So this first week, I'm going to diagonalize it, and then after that, I'm going to either hold the long calls or exit the whole thing. This thing looks pretty decent if we get a run in the energy sector. Those are all the trades I have for you today. If you want to share more trades with the rest of the Maverick Trading group, you know where to go. Log into the website, go to the members area, jump on that forum, and let's get some discussion together about potential trades for this week. Let's wrap this up. Quad witching this week. I think it makes sense to get a little bit defensive. Now, please, if you've been listening to me for the last 3 months, I've been like pounding on bears saying, why are you still bearish? Why are you still bearish? Get on the train. It's going higher. I've been very, very vocal on that. For the first time, I'm actually saying, hey, everybody, we may be getting to the end of the ride, and we're starting to see some signs that it might be the end of the ride. We could still go further. We don't know. But let's just open our eyes a little bit, and let's be a little bit more defensive here, at least for this week. If we can get through this week, we get a pullback, and then we can run back up. Okay, maybe the party's going to be back on. I just think this is a week to be a little bit more cautious than we've seen over the past couple months. Other than that, guess what? It's still a bull market. Until it changes on the charts, we have to assume it's going to continue. That's it for me. Have a great weekend. Take care, everyone. Goodbye.